What's going on, everyone? I am Charles Moon, the disciple of trend, and this is my podcast, Buy High, Sell Low. Just want to mention that stock and stock options trading does involve a substantial degree of risk and may not be suitable for all investors. Past performance is not necessarily indicative of future results. What's going on, everyone? Podcast number 4. Uno, dos, tres, 4. Yeah, that's right. I'm still here, guys and gals. Listen, it's a crazy week. I do want to start off and say, if you're new to the podcast, I hope you thoroughly enjoy, maybe even learn something, and you'll continue to watch, then like, then subscribe, and then comment. Guys and gals, it was a crazy day today in the markets. Not so crazy, but there was some news that's just a bit of a follow-up from last week's podcast that's leaking in today. Now, today, primarily, we're going to be talking about momentum names. I'm hoping I could fit in a whole bunch of names that you may have never seen or heard of before, and maybe names you are familiar with. Now, if you take a look at my shirt, guys and gals, it's Wednesday evening, 9 o'clock on the dot. That's what time I started. You're going to get this Friday morning, I believe. The reason why I'm recording so early is because I am going on vacation, going to the West Coast, sunny California, palm trees, yeah. Listen, it's like 50 degrees and raining right now in Chicago, and it's 72 and sunny, I believe, today in California. Yeah, you tell me where you would rather be. So let's get on with the podcast. Guys and gals, today the FOMC meeting and press conference took place. Well, the meeting took place last night. The announcement came in. Listen, folks, out of the voting members, there was one dissent. Good old James, I am only dovish Bullard out of St. Louis. He voted to actually cut the rate for this month. The other 9 votes were to hold off. They removed the word patience from their language. This is important. I'll explain in a second. And in turn, they basically said they would be willing to be accommodative. They kind of, and this is my opinion, I'm not going to say this is set in stone, but the way it was kind of being brought out, the questions and the responses that were being, the questions that were being asked and the responses that were given, in essence, were saying that, yes, we have eyes on the trade war. We understand what the fallout may potentially be. We would like to be preemptive just in case, right? It doesn't hurt anyways. Guys and gals, it's music to my ears, okay? I don't know if you remember the last time I brought this up, okay? But I'm going to kind of give you a little bit of history here. The current rate for the interest rate here by the FOMC is established at 2.25% to 2.5%. For the month of July, it is now being priced at 0%, that it remains at this current level. On the first day of June, it was at 13.6%, and at the end of the first week, it was saying 14.9%. Now the markets are pricing in a 71.9% chance that we only see a quarter cut and a 28% chance that we could see anywhere from 0.5 point to 0.75 of a point. Now, if you're wondering, why did this number jump up so high? It was actually presented to Chair Powell. And he said, well, we're unsure when we do make the cut whether we will do a 0.25 basis point or 0.5 basis point. So the fact that he even mentioned that it could be an option allowed this to jump. Now let's look at September. 0%. We were at 4%. And look at the numbers. There's only a 12.5% chance that we are at a 0.25 point cut with an 87.5%, guys and gals, an 87.5% that we're going to see more than a quarter point cut. Whether that's the second hike coming in September or it's a full-on cut for half basis point. Now, I'm not going to bore you with October. I'm going to go straight to December. Now let's look. It's only a 3.8% chance that we only do one quarter, and the pricing is pretty significant all the way to a full basis point and more. Let's say 1.25. Okay. What was 1.8% now 4.3, which is still unlikely that we get all the way to that 1 and 1.25 range. But they're saying there's an actual pretty decent chance that we could see it down to 1.25, 1.5. Preemptive, ladies and gentlemen. Now, the question is, we may ask, what's going to happen if an actual deal is made? Well, markets are going to rally. Fed doesn't have to step in. It may not rally as significant as everybody's going to think because we already have that rate cut bump. But nonetheless, the bulls will get what they want. It's pretty simple. It's a good situation for the markets to be in. No deal made. Fed may aggressively look to cut rates. Deal is made. Back to normal for the markets. People may doubt this, but we will see. Time will tell in the next, let's say, 10 trading days, which is 2 weeks, how the market is going to react. Of course, with the G20 summit coming up here, it is going to be important, right? We get some positive, progressive, talks going and happening, and really steps towards a deal. Baby steps at that, towards a deal is being made. And if that happens, wait and see. Market's up 1.5%. Probably, yeah. Easy for that day. Just for that day. Then you string 5 days, and next thing you know, everybody's happy again. Think about the market reaction the other day when Trump mentioned that him and President Xi are going to meet. They confirmed it. Big jump in the Dow. Up over 400 points at one point. So it's important, guys and gals, that you know these momentum names. Because when the market gets bullish, these are the stocks that realistically, in all honesty, can be the game changer. Not Apple. Okay? Yes. Can Apple jump 10 points from here? Absolutely. But in the time that Apple makes that 10-point move, some of these stocks, which are right around the same price, if not cheaper, okay, can make that move and greater. And we're talking about some of these stocks being priced at a third of what Apple is and can move almost on that same scale within that same time frame. It may not be as big from a point-by-point standpoint, but certainly it's going to match up. And from a percentage standpoint, from a leverage standpoint, if you could buy 100 shares of Apple, that means you could buy 300 shares of, let's say, a stock named Plan. And if that stock moves to the same tune and degree as Apple does in that same period, well, let's say it moves 10 points, 100 shares, that's $1,000. Plan, 10 points, 300 shares, $3,000. Aha! Now I have your attention. Ha! Yeah. Now, some of these stocks are expensive, but again, that's why they're on this list, because they weren't that expensive a year ago. Now, let's talk about expensive. It's relative, okay? Surely, with a $5,000 count, a $50 stock is going to be expensive. Listen, I understand that. That doesn't mean you can't buy 10, 20 shares and get a return that would be greater than, let's say, a stock like Mattel can do for you, or Wendy's can do for you. Although I love Wendy's, by the way, both as a stock and as food. So let's go through this list. I trust me when I say I have a massive list of momentum names. I'm going to give you some qualifiers for this, and I'm only going to give you a small portion of this list. Names that I believe, that I feel just aren't talked about as much or as often, but people that have been paying attention know about, okay? Now, the profile of these stocks is that they actually have to trade 1 million shares on average per day, okay? That's going to be important. Now, some of those stocks may have been at that million scale and have fallen off. That's fine. I still want you to keep an eye on them just in case they start getting back. Now, this is one of those stocks that don't hit on that million scale, but is as consistent as it can be. And it certainly doesn't trade on a smaller scale by any means, okay? And again, at one point in time, 1 million plus. It shows institutional activity. It's important. Paycom, PAYC, payment processors. I'm sure you've heard a bunch of them. But if you haven't, I'm going to give you a few names that you have to keep an eye on. Yet again, what is important is the actual momentum. We're going to compare where they were exactly 1 year ago at the 52-week low and where they are now. Now, to register this, the left of the chart is the furthest date back. To the right of the chart is the nearest time frame, meaning this line or this bar that I am pointing at right now, that was the trading action today. It closed today at 225.89. Again, 52-week low, which was June 28th of last year, was 96.44. Think about that. It went from 96 to 230. Payment processor. Okay. Now, the point of me talking about this is I'm not going to break down the profile of each company. I could do spotlights in future webcasts, but more than anything, names that you have to keep an eye on, names that you may not be familiar with, and of course, names that you are familiar with, but maybe just don't track enough. Now, PayPal is one of those names. 52-week low is at 74.66. They are at 118. Now, the reason why they're on my list is that I believe this isn't even the full-on potential. This may be just what we would consider a part of the body of the move in terms of the long-term picture. So for me, based on where they've gone this year, from 80 to nearly 120, that's a big percentage jump. Not nearly as big as this momentum name. Everybody should know this name. And if you haven't been paying attention, you missed out on a lot. This was a stock that was $26.30. And then all of a sudden it opened the year. What did it open this year? At $29.82. We just hit a high of 106.55 today. It closed at 106.49. Listen, I actually even got in, called out a signal here, and we literally just missed out by 22 cents. It was in the 104 range, by the way, in the last hour of the day, and it closed at 106.55. I'm sorry, it closed at 106.49, hit a high of 106.55. Pure momentum. Most notably, okay, since their last earnings report in early May, they opened that day at $70. They've gone up 30 points since the second week of May, guys and gals. So if you haven't been tracking Roku, you've either been ignoring this name or you're not paying attention. CDNS. Now, this stock is insane just the same. Just like what I believe in PayPal, this name I believe is just starting to move. Charlie Delta November Sierra, 39.08 is the 52-week low. They just hit a high of 71.61. Now, not all of these names do have something in common, but a lot of them do. They're either generalized in the two hottest sectors, okay? Not all of them again, but most of them are generalized in the two hottest sectors. One that everybody talks about, which is cloud or cloud-based platforms or cloud-based infrastructure or data analytics that's based through cloud. The one that I don't believe gets enough attention is payment processors or global payment processors, or let's just say anybody that handles some sort of digital transaction and or currency in some form or fashion, regardless if it's retail, regardless if it's corporate, as in payroll, it doesn't matter, right? Look at Paycom and that move. Now, this is one of the stocks that is, in my opinion, very interesting because, in a sense, they potentially could be revolutionary, all right? Carvana. At this moment right now, they're basically an app company. They're a momentum name. And so what I love about this stock is the upside momentum, because they have shown this potential for immense growth over a sustained period. And when I mean it goes bullish, it goes bullish. It makes big moves with very smaller pullbacks, and smaller by little dips, right? They generally don't even pull back 50% from where they started, those types of moves. In the same sense, they could fall in that same way. So Carvana, and to me, is more of a timing component with the stock. But if the timing is correct, ladies and gentlemen, you can benefit and reap the rewards in a very short period of time. Again, a stock that was at $28.44 at the end of December, $28.44, just hitting a high about a month ago at $76.85. Again, a bit of more like an app company, but potentially revolutionary. I've already known a few friends that have purchased their cars through Carvana. They bought their car through an app. Now, the aforementioned plan. This is a fairly newer name to the markets, but you could see they kind of had this consolidation period after their IPO, and then boom, look at this move. And so far, from the lows, we went from 2037 to 52.35. And generally speaking, we're talking about going from 24 to 52 this year alone. What's really important is that we're seeing metrics and signs of very bullish and technical behavior in this name. So when I look at this name, I see great opportunity and great growth potential. And it's not to say that this stock can't unravel and completely fall down and fall flat on its face like a few other names that may be on this list. But these are names that you should know due to the momentum and the volatility. Okay? Some of these absolutely could be investable assets. Some of these, again, look at them more as trading assets. For now, because the stock is so new, while the growth potential is immense, I love this more as a trading asset. One of the biggest momentum names, if not the biggest in my opinion this year, is Shopify, with news today, by the way. Why am I saying one of the biggest? Because they basically opened up this year at $134. They're at $327. There's no doubt in my mind over the next few days, they are going to hit that particular mark. Okay? Where's the opening price? Right here. Of 134. That means they're going to hit that price of 334, where they represent 200 points in gains this year. Yes, $130 still expensive, but in comparison, how expensive really was it now that you see how this stock has performed? And it's not like this is the first time, ladies and gentlemen, that the stock has performed like this. Since inception at 26 to 327, it's made huge moves before. By the way, Citron continues to try and short this name, and yet here we go. Again, I have so many more, but I'm just going to fly through these as fast as I can. AYX, guys and gals, 52-week low at 34.80, 109.50. 109.50. We started it this year at right around $57. So basically doubled in price, guys and gals. Doubled in price. Now, what I want to do is I'm going to do a quick, right here. So more info, we're going to go to the fundamentals. So what it is, it's a self-service data analytics software providing company, okay? it actually moved in sympathy on the Looker deal. Now, I'll talk about this in a second and why the growth potential in cloud names are tremendous. But you're going to see why. And you're going to understand why just a little bit as to why these stocks are moving the way they are and trending the way they are. So this is by far one of those new age tech names. Okay. GPN, Global Payments Inc. Another payment processor. Okay. It's really just a provider of technology services. That's really what it breaks down to. But again, what's the growth? From 102 to 162. Substantial. Outside of the recent volatility, look at how easy this stock rallied. It is strong. And this is a stock that really just did not take on that much heat. And it's very similar to a name like TSS, who, by the way, is now being viewed or has been rumored or news came out that GPN is buying out or merger and acquisition, M&A, TSS. Same thing. Do you see how the stock, it closed at 99.62? And I was talking to my room about this. I was like, well, when the stock flips, we're going to be ready to be a player. News broke, and then again, it closed at 99.62. It opened the following day at 107.70 and then hit a high of 117.44. And then the following day, it was at 123.66. And as you can see, it just hit 130.62. It basically gone from 100 to 130 in less than a month. And if you look at where the opening price this year at 79.70 to 130, again, huge growth name. Now, of course, I will say the last 23, 30 points for this stock is purely news driven. Of course, they are the product being bought out. Hence, investors for this stock truly benefit way more. But yet, that's the thing. The stock continues to go up. The momentum continues to be there. And the bullish behavior is oh so bullish. Bullish, guys. Bullish is important. OKTA, another cloud name, guys. This is important, okay? We talk about cloud platforms. I'm going to talk about it a little bit more. I'm going to break down why the beauty and growth of this sector is. But look at the common theme here. It is definitely secular driven. If you're a cloud-based company and you're not doing this, you are left behind. And that means you want something. If you're invested in that name and shied away from this name, I hate to be the bearer of bad news, okay, but you might be in the wrong stock. We say this because, again, when you pull up all these cloud names, they have something in common. This, SpaceX, Blue Origin, rocket ship, go, launch, 60, 70, 80, 100, 120 more % gains so far this year. Might I remind you, folks, this podcast is being done in June, not December. We still have half a year to go. So if the market goes in a full-out blowout rally, where can these stocks possibly go? All right. Now, this stock, by the way, is not a cloud-based name per se. They are integrated with cloud. They have their own server database. They're more HR, okay? But they incorporate cloud. They're like a cloud enterprise, so to speak. More than anything, all I want to point out is that this is one of the names, okay, that are more heavily traded, more actively traded, more talked about in the markets. So in turn, the growth capabilities is not as great as the other names. Most notably, if you look at where they've started from, the growth capability is already a bit priced in. That being said, that does not mean Workday cannot go higher. It is pretty evident that this stock is pretty bullish. Maybe not as bullish as OKTA and others, but it opened at 155.96. We hit a high of 217.63. I'm pretty sure if you bought a stock and it had that kind of gain so far this year, you would be an absolute fan of that company. I'm sure everybody knows about Workday. And I'm pretty sure a lot of people know about Twilio. If you don't know about Twilio, let me tell you something. They work in cloud. They have ties to AWS, as Workday, I believe, has ties to Microsoft. Ever so important. Again, Twilio opened this year 87.45, hit a high of 148.80 so far. You getting sick of it yet? Let me put that away here. Another cloud-based name and a huge momentum name is Mongo. MongoDB Inc. Last year at 47.69, hit a high of 184.78. They opened this year at 81.40. The stock is up over 100 points this year. It's been in a huge consolidation period, and guess what? Broke out. Very bullish, fundamentally driven because of earnings, raised guidance, yada, yada, yada. Look at this move. If you haven't heard about Mongo, you've heard about it now, and let me in you on something. This is one of the must-watch names along with OKTA. It's one of those you must-watch names. I am not kidding about Mongo. This is oh so important, okay? Smartsheet, SMAR. It's a cloud-based platform. What a surprise. Let's talk about where it started this year, okay? And I know this is not being too informative. I just want to give you these names. $24.18 was the opening price. We are now at $50.42 as a high, which happened yesterday. Incredibly strong name in SMAR with huge potential. This stock is barely a year old. It's only at 48.60. It's cloud-based. It's bullish. A lot like PLAN, guys and gals. It is new. Where can this go? Too early to tell. I'll give you a few others here. Look at Coop, C-O-U-P. That's another name that's up huge from 65 to 129. Obviously, Vive. That's another name that's cloud-based. That's around 90 to 170. Of course, I understand the IPOs, BYND. Whoops. BYND. What a maniacal stock. All right. And if you ever heard of Zoom Video Communications, that's another name from $60 to $105 in a month and a half. There are two new IPOs coming out. Work, W-O-R-K. By the time you get this video, it'll have been released because it comes out on June 20th. Work, which is Slack Communications. I believe the pricing is somewhere between 22 to 25. It wouldn't surprise me to see it hit 50 very, very shortly after. Maybe not the day of, maybe not the week of, maybe a month after. It's taken Uber and Lyft a little bit of time, but yet Lyft is on the move now, and that too can also be a momentum name, but we'll stay tuned. Last but not least, this is a stock that just came out yesterday. It opened at $11. Is at $50.32. That's not all. It's hit $80 in pre-market action. It started trading yesterday, okay? Right around $13 yesterday. Now, I don't know what's going to come from this. This is basically considered a financial stock. It's like an investment firm that's invested, I believe, in the cannabis sector, but the technology of cannabis sector. It's a momentum name. But if you keep an eye on it, this is one of those, it could turn into BYND. I don't know the overall float for this name. I'll have to do more research on this. I bet it's low as heck. And I'm telling you right now, guys and gals, don't buy and hold this name for more than just a short period of time. Do not be greedy. It is worth sniping. Do not expect the stock to go to $1,000 at this rate by next week. It is up from $11 to $80 in 2 days. I assure you, it could drop the same amount in 2 days. All right? Just so you could keep an eye out there. I didn't plan on having this name out there. I only threw it out there. Okay? I only threw it out there because of the move. Now, I'm going to quickly just talk about cloud companies, and it's going to be probably about a minute long. And if you need more than a minute for me to explain this, you just don't get it. No offense. I'm not trying to be disrespectful. I want you to understand this. Google paid a massive premium for the Looker deal. You could search it up. You could see how massive of a premium they had to pay. CRM bought out Data, okay? Data, D-A-T-A. I'll throw it up here. Data is more into analytics, okay? Look at this jump, 125 to 173. That's one hell of a premium to pay. And it's because it started, in my opinion, when IBM bought out Red Hat. RHT. Now, RHT still trades, guys and gals, okay? People may not know that. But when RHT was at its 52-week lows at $115, IBM said we are going to pay a 30% premium, okay, above whatever day's high. Not saying whatever premium was from that price. Because IBM fell so far behind the game, they had absolutely no choice but to pay up, by the way. And the only way that a company like Red Hat was going to sell itself was at that insane premium. It's simple. Your value is what the market tells your value is. And if everything is being sold at a premium, and even though the current valuations are way, way forward from their current sales, their current clientele, their current revenue generation, and let's say a negative EPS, they're burning cash. It does not matter. It does not matter. Because there's people out there willing to pay that 30% premium from an overvalued price. Think about that. Do you want to know why these stocks keep going up? Because these stocks are in high demand in a sector that is absolutely brand new and revolutionary. And in fact, there's no such thing as file cabinets anymore. File cabinet makers are soon to be going out of business, if not already. Everything is going to transition to cloud. Every Fortune 500 company is moving to cloud. They're moving to data analytics. They're moving into CRM integration. If they haven't already, by the way, you should be ringing alarms on that company. Because let me in you on something. Wall Street's a cold-hearted place. If you are not up with the times, you get left behind. And when you get left behind, you get chewed up and then spit out by traders, by investors. I hate to say it, kill or be killed, right? Adapt or die. It is the laws of evolution, whether you believe it or not. Look at how money is transitioning. Why are tech names so beloved? Why are they moving at the rate they are? On top of just institutional activity, high-level retail demand, and of course HFT systems, it is pretty simple. It is the future, and the future is now. Guys and gals, with the premium being placed on these stocks, companies still see that it's a value buy in the long run. So with this newfound transition, the growth potential is unknown because it's too new. So I'm not saying these names are going to hold these levels at these premiums for the rest of their life. They could come crashing down to earth. For those that are looking to invest, there are still some incredible opportunities. For those that are looking to trade, these are going to be some of the best names to be swinging around in. Whatever your cup of tea and coffee and however you like it, that is your approach to these stocks. Now, buyer beware. Do your due diligence. Do your research. I love these names because of the momentum. But mind you, I'm not an investment advisor. I'm a trader. I love opportunity. I love value. And I love winning. My Twitter handle, folks, is the Disciple of Trend. The one thing you noticed about all of those names, they seem to be in an uptrend. We talked about the predictability factor. You see how this is all starting to incorporate. Now we know what sector to watch for now. We know the opportunity in this name. And people are going to say, look at how much it is. I need to short this thing. Good luck to you. I hope you time it right. I'm not saying the stock can't drop. It can absolutely drop. Just make sure you time it right. You're on the wrong side. It's not that hard to find yourself upside down 6.5 points, especially in a name like Mongo. There's a reason why their ATRs are pretty high. But if you like these names or you're interested, just watch. Just watch how they perform, both up and down. And then, again, we'll talk about it in a year. I'll still be doing my podcast. We'll see. I'm never going to say, I told you so. I just want you to be informed. If any of these names that I've given are not in your watch list or not names you have been tracking, maybe you should. And for those that have been watching these names, I hope you've been taking basically profits and putting them in your pocket as much as possible. Let those ATM machines pay you, guys and gals. Now listen, we're going to wrap this up, but I do want to say thank you. Thank you so much for tuning in. I would love to hear your thoughts on these names. Are they overvalued? Do you believe there's still some value? Comment down below in these videos if you're watching on YouTube, or email me comments. If you want to talk about content, you want me to talk about one particular name and just give you a total breakdown, email me, podcast@prospertrading.com. Ladies and gentlemen, as I always wrap things up, if you happen to enjoy this information, if you think this was informative, if you thought it was somewhat entertaining, but more than anything, you took something from this, whether it's the name or the information or the sectors themselves, I would greatly appreciate it if you drop a like, drop a comment, subscribe if you haven't already, and most importantly, share the love. Ladies and gentlemen, just want to say thank you. But lastly, I want to say thank you, Jerome Powell. Let's go, Bulls. Markets on up, guys. Until the next podcast number 5 coming up soon. See ya, everyone. Don't forget to like, comment, and subscribe. Also follow us on our socials, Facebook, Twitter, and YouTube. If you have any comments or questions, you can email me, podcast@prospertrading.com. Thanks, everyone.